I'm looking at some other sectors out there that I think are very interesting. On the pure energy front, one of them is coal. A lot of people think that coal is sort of a dead fuel, that it doesn't have any future anymore, but the reality is quite different. China gets 80% of its power from coal. The United States gets half its power from coal. India gets about 70% of its power from coal. So coal isn't going away. Some of you may have heard of a new solar plant, the largest solar plant built anywhere in the world, which is planned to be built in China, which is going to be a 2 gigawatt facility, which seems like a huge plant. However, if you look at the details of the deal, the first gigawatt of the plant is expected to be completed by 2014. The second gigawatt, so the second half of the plant, is supposed to be finished by 2019. So basically it's going to take 10 years to build out this 2 gigawatt solar power plant. China has such a huge capacity, over 617,000 gigawatts of electric generating capacity in 2007, at the end of 2007, according to the Department of Energy. So 2 gigawatts in the context of 617,000 gigawatts just doesn't sound like a lot. And if you consider that in 2007 alone, China added over 100,000 gigawatts of capacity to their grid, more than 90% of which was coal-fired power capacity. So we really have to put this into context, and you'll hear a lot of people say that coal is dead because it's going to be replaced by alternatives like wind and solar. The reality is quite different. We're talking 2 gigawatts, the largest ever built, out of 100,000 plus gigawatts added in 1 year alone in China. So China is still going to remain very heavily dependent on coal. Coal prices have been down over the past year, primarily because of the slump we saw particularly in late 2008 and early 2009. U.S. coal prices still remain quite depressed. The main reason there, due to the drop in demand for electricity, stockpiles of thermal coal is a lower grade coal used in power plants, have been rising, which means there's a glut of coal on the open market and at utility stockpiles. And the other thing, of course, is the decline in demand for electricity. We should see that to begin to sort of turn around as we move into 2010. I expect those stockpiles to normalize. Thermal coal prices should begin to recover. On the metallurgical coal side in the United States, we are beginning to see the first signs of an uptick in demand. Some of the metallurgical coal is used in steel making. Some of the steel mills that have been shuttered or scaled back in terms of output are coming back online now, and therefore demand for metallurgical coal is beginning to pick up. We've heard from both Peabody Coal, which is the largest U.S. coal miner, Arch Coal over the last week, which are both saying they're seeing a little uptick in U.S. demand for metallurgical coal. The more exciting story right now, however, is Australia. Australia is the world's largest exporter of metallurgical coal. It's the second largest exporter of thermal coal as of last year, but it really trades that position back and forth with Indonesia. Those are the two dominant suppliers of thermal coal. Both Peabody and a number of other companies in Australia who operate in Australia are saying that Asia-Pacific demand, especially for metallurgical coal, but also for thermal coal, is actually booming right now. We're seeing a major uptick in metallurgical coal demand from China. A big emerging story on the thermal coal side is India. India is expected to be the world's fastest growing importer of thermal coal over the next 5 years. So that's going to pull a lot of demand for coal for companies involved in Australia. So one of my top picks on the energy side would really be looking at companies who are involved in Australia, export markets of thermal and metallurgical coal to China. As we move into 2010, I'm going to start to become a lot more interested in U.S.-based companies, especially U.S.-based companies with heavy exposure to metallurgical coal production. The final area I want to talk about today is really technology. This is a theme we've been pursuing aggressively in personal finance since the March lows, and really a little bit before that. Technology has been a leader in the U.S. market. It's one of the only sectors where we're seeing the first signs of evidence in actual revenue growth. If you look at second quarter earnings for most U.S. companies, there really wasn't a whole lot of revenue growth there. Most of them, more than 80%, actually beat on the bottom line, meaning that they beat their profit forecasts or the consensus estimates of what their profits would be for the quarter. 80% is a particularly large number for that. Most did not beat, though. Only about half beat on the revenue side, which is about average, meaning that most of the profit upside came from cost cutting. Cost cutting can sustain profits for a few quarters. obviously eventually you need to see actual revenues, sales grow, actual demand filter through. One of the only sectors where we're beginning to see that is technology. One of our top picks there for a long time has been Big Blue, old IBM, one of the best known companies in the United States. Symbol is obviously IBM. This company, a lot of people still think that it's involved in the production of personal computers and laptops. It got out of all those businesses years ago. Now their main focus is on services and software. And one of their hottest markets right now is middleware, which is basically designing systems that allow disparate networks across an organization to communicate with one another. Very hot, fast-growing market. Actually cuts costs for most companies, so demand has held up very, very well despite the downturn. So those would be three sectors that we're looking at right now across the three products that I edit. On the MLP side, look for a return to growth and a growth in dividends for some of the companies involved who are now able to get access to credit at favorable rates. On the energy side, have a look at coal, and in particular coal in Australia. And on the general market side, have a look at technology, one of the only sectors out there actually showing real revenue growth this year. Thank you very much.